You want to know something crazy? After 30 years of selling homes and doing mortgages, I've watched buyers make the same expensive mistakes over and over. Today, I'm breaking down how to avoid throwing away your money like I threw away my first set of teeth. First up, working with multiple agents. Listen, this isn't speed dating, y'all. When you work with multiple agents, you're not being clever, you're being counterproductive. Agents invest serious time learning your needs, and you're getting shallow service from everyone instead of deep, committed service from one agent.
What do you think about that?
Well, I think it's true. Perfect example is the other day, I had an opportunity to talk with a lady that was looking to sell her home. It was a rental property, and she had had multiple realtors that had listed it and had taken it off the market because they were not having any success and were not getting the price that she wanted. So when I contacted her, she was ready to go until she got to the point she said, but you know, I don't want to hurt these other realtors' feelings because they couldn't sell the property. And so I've got to keep that in mind, and I will let you put it on the market, but it will be, you won't be able to list it. You'll just be able to sell it. So you bring me a buyer and I'll work with you. And my comment to her was, why would you be concerned about these other real estate agents if they couldn't sell your property? Isn't the purpose to get your home sold? Isn't that what you want to accomplish? And of course she agreed. And I said, so if I list it, I will also be able to find buyers multiple ways, whereas this way I will be limited to what I can offer. So do you want to sell your house, or do you want to protect the feelings of the past realtors that did not sell your house? I'm here to sell your home. Are you ready to go? Can we do this now? She's going to do it with me. But you got to think about what you want. Do you want to sell your house, or do you want to protect feelings? Playing house without pre-approval. Just having celebrated the 40th anniversary of my 31st birthday, I've learned two things never lie: my bad knee in rainy weather, and sellers who won't take buyers seriously without pre-approval. When you house hunt without pre-approval, you fall in love with a house you can't afford because you don't know what you can qualify for. Secondly is that you lose credibility with the sellers. Someone else with a pre-approval swoops in and steals the house that you were dreaming of owning because you didn't come prepared. It's like showing up to a Rolex store in flip-flops carrying Monopoly money. Nobody's going to take you seriously, and can you blame them? Pre-approval is a requirement. I won't even take you out to look at buying a home until I know that you've been pre-approved, and the reason for that is you don't know what you qualify for. Your credit may be great, but you may have a limit due to debt ratio, and debt ratio is based on how much debt you have, which does not include utilities. It includes your mortgage payment, it includes your adjustable rate loans, which would be like your credit cards, and your fixed loans, which would be like your automobile. It's all based on that. You've got to have a certain percentage of money left over. So you may have a high loan to value that will not allow you to buy that particular priced home, even though you've got great income, great credit. The house may be too big. So let's get all that figured out before we go out, so that it not only saves you time, but when you walk in the door with an approval and you say, I'm approved to buy this house, your banker's giving it to you, it's on their letterhead, then you've got an immediate opportunity. And if you come in full price offer, you're probably going to get it right off the bat. You don't know, so we have to present, but go prepared. Get a pre-approval first. The 30-year fixed rate trap. Everyone thinks they need 30-year fixed mortgage like they think they need a pool in their backyard. It sounds good until you do the math. Less than 1% of homeowners keep their 30-year fixed mortgage for full term. Meanwhile, you're paying higher interest rates for flexibility you'll never need. Plan to buy on a 5 to 7 year term. Look at 7-year ARMs or even 5-year ARMs. They used to have 228s. I'm not sure if they still do now. Or you can look at a 15-year fixed rate if you think you're going to be able to pay it off in that window of time and you're going to be retiring. Here's one kicker for that one. You can still get a 30-year fixed rate, and you can find out through your banker, have him give you an amortization schedule and tell you that if you were to pay it off in 15 years, how much would you have to pay to make that happen? You still keep the 30-year, but let's say that your 30-year mortgage payment is $3,500 a month. And then he tells you that in order to pay it off in 15 years, your payment is $4,200 a month. You pay that extra $700 every month on top of that. If you ever get in trouble financially, ever, you still have the 30-year fixed. You don't have to worry about the $700. You only have to be committed to that $3,500, and you're fine. So it just gives you a little breathing room. You accomplish the same thing. You pay it off in the same window of time, okay? So that's just for consideration, and we'll talk about that when we get further into this and when we talk with your banker. First-time home buyers, FHA loans might save you thousands of dollars. They're also easier to get into because they have a lower credit score requirement. And they also will loan up to every bit of 3.5%, and you can even have the seller finance that 3.5% for you. So you've got several benefits there that would serve you well to look into FHA loans. Again, your banker will tell you all about that when you get to that point. The right mortgage can save you more money than my discount senior coffee at McDonald's. And that's saying something, trust me. Flying solo without a dream team. Real estate isn't a one-man show. You need a dream team, and I'm not talking about the '92 Olympics. Here's who should be on your roster. A good inspector. I can tell you I've got the best of the best. And this gentleman goes in, he inspects it. Even if it's a new construction, you want to have a dream team involved. You want to have a good inspector involved that tells you what they need to complete. And sometimes they will give you a warranty on new construction and give you a year to get with them so they can fix everything. Get it fixed before you move in, because they're going to be a lot more responsive, meaning that they know you're going to close if you get this fixed. If you don't get it fixed, it's going to take them longer and they're going to be having carrying costs. So get that taken care of up front. Property insurance agent, got to have a good one. Home warranty company, suggest that highly. If there's anything that goes wrong with your new equipment, it's replaced. And home warranties, we'll talk about those as well. Pest control, trust me, you don't want to miss out on that. Got to have it. Financial advisor is a good thing. Tax consultant, absolutely. And last but not least is a good title company. I work with a title agent that owns the company that's been in the industry for over 30 years. She is by far the best title person I have ever had. I will introduce you to her and you will love her. She's marvelous.
So out of those choices, what are your top three?
Well, my top three out of those choices would be to be sure you've got a good home inspector. Want to make sure that. Number two, a good title agent, because that good title agent is going to make sure, she's going to make sure that your house is recorded properly. She's going to deal with the banks, the lending institution. Everything's going to be handled through her. Highly important to be sure that it's recorded properly. So I would say that is one of two items. I think the third thing that'd probably be most important is property insurance. So that would be your three to consider if you had to pick, and you won't. You'll want them all. You think your agent has all these bases covered? Are you kidding me? That's like thinking your dentist is a mechanic. Quick fire rookie mistakes I see every day. Skipping the home inspection to save money. Never do that, because you don't know what's going on in there. You can't tell by looking at your house if it's in great shape. This is a guy that's trained to know what to go in and look for. And he will tell you, and then he will have the builder or the homeowner there to discuss everything so that there won't be any questions what's got to be fixed before you're willing to buy. And some of those requirements may be required by the lending institution. If they don't meet their requirements, that house is not going to be yours. So they've got to get all that stuff fixed first. Not reading the HOA documents. You want to be sure that you do that to know exactly what you're moving into. If they won't let you put up a certain sign in your home or in your yard that it's important to you, know it ahead of time. Making big purchases before closing. Here's what's so important about that. You go out and buy a car, you go out and buy a whole lot of furniture before you close. Guess what happens to your debt ratio? It goes up. Guess what happens to your loan for your home? It goes away. You cannot add more debt. So when you go to see your lender and you tell them exactly what you have, or they see exactly what's on your credit report, don't add to it. If you do, you could end up losing the opportunity to buy that home. Falling in love with staging furniture. It happens. Thing I would tell you is that's something you deal with outside of the closing, and you do that after the closing. Work that out with the real estate agent. You want my complete guide to avoiding expensive home buying mistakes? Comment SAVE below and I'll send it right over. And remember, in real estate, experience isn't expensive, it's priceless.